Welcome. In this video, can XCN coin replace XRP coin? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze the XCN.
Upward trend structures are among the indicators that investors particularly focus on in technical analysis and are highly valuable in predicting potential price directions. When an asset consistently forms higher lows and higher highs over certain timeframes, it indicates a general upward trend in the market. Such structures show that market participants are increasingly taking long positions and that supply is gradually being met at higher price levels. Especially when price movements approach trend lines, they become key points of both opportunity and risk for investors. These lines are regarded as both support zones and decision levels in technical analysis. In the current scenario, the analyzed chart clearly features an upward sloping trend line, and the price is approaching this line. This makes a potential bounce a technically strong scenario. This ascending trend line has previously acted as a level where prices tested multiple times, reacting upward with each touch. These kinds of trend lines often function as zones where both psychological and algorithmic buy positions are triggered. A review of past data shows that each time the price approached this trend line, there was a spike in volume and an increase in buyer activity. This is a strong indication that the current market structure is still under buyer control and that the upward momentum may continue. For example, after touching this trend line in the past, the price has rallied approximately 20 to 30% in a short period, delivering highly satisfying returns to investors. Such past behavior serves as key reference points for trading strategies based on technical analysis. Currently, the price is trading near this ascending trend line. Situations like this are closely watched by investors and are often moments when they prepare to take positions. If the price touches this line and reacts upward, it indicates that the upward trend remains intact and that the market structure is still healthy. For trend-following investors, this is considered a strong buy signal. Furthermore, green candles forming at the moment of contact with the trend line can confirm that buyers are regaining control and that selling pressure has been broken. In technical analysis, these kinds of structures offer attractive opportunities in terms of risk-to-reward ratio, because stop-loss levels can be clearly defined and targets can be set wide in the direction of the trend. Another important aspect to pay attention to at this stage is how the price approaches the trend line. If the price approaches with a sharp and high volume drop, it's better to be patient and wait for confirmation candles before entering a position. However, if the price approaches the trend line with a slow and weak selling pressure, this is usually interpreted as a healthy correction and increases the likelihood of a strong rally afterward. In the current outlook, the price appears to be approaching the ascending trend line gradually with moderate volume levels. This can be interpreted as a sign of a healthy correction phase, laying the groundwork for a possible bounce. From the perspective of investor psychology, ascending trend lines also carry significant weight. Many investors view prices touching these lines as a buy zone and prepare to open positions around these levels. Likewise, algorithmic trading systems and large institutions may have positioned their buy orders based on these types of trend lines. As a result, when the price touches this level, a sudden increase in volume followed by an upward move is a common scenario. Similar behavior has been observed in the past, where the price often made sharp upward movements after touching such trend lines. The current proximity of the price to this ascending trend line indicates a potential buying opportunity in this region. However, what's important here is how the price reacts immediately after touching this line. If the price immediately forms a green candle and is followed by a few confirming candles, this would be interpreted as a strong signal for buying. But if the price continues to close downward after touching the trend line, the risk of a trend break increases and investors need to closely monitor this zone. In such situations, it is crucial for investors to assess volume analysis, candlestick formations, and other technical indicators together. Additionally, the duration for which the current ascending trend line has remained valid is also important. In technical analysis, trend lines that have held for a longer time are considered stronger support levels. Therefore, if the current ascending trend line has been in place for several weeks or months and has been tested multiple times without being broken, it indicates that the trend line is solid and reliable. A price approaching such a robust trend line typically results in scenarios where market participants enter trades with greater confidence. Investors generally see prices touching this line as both technically and psychologically optimal entry points, which leads to increased volume, higher liquidity, and upward price movement. But we can't make decisions based solely on trends. Let's now look at other metrics. Stay tuned.
When analyzing the price structure on the chart, it is evident that the asset is moving at a highly significant level from a technical analysis perspective. Evaluating the current situation, it is clear that the price is trading in an area where strong buyers previously stepped in, the supply-demand balance was disrupted, and a notable buying response was observed. In technical analysis literature, this area is defined as an order block, and it is typically one of the critical zones where the market changes direction or experiences strong price reactions. One of the most fundamental characteristics of such blocks is that the price has historically reacted sharply upward when reaching this level, often leading to new highs. Therefore, when the price revisits these zones, market participants, especially large investors and algorithmic trading systems, may consider re-entering positions. These areas are seen as levels that enhance market liquidity, lay the foundation for upward price movement, and hold the potential for a new bullish wave. Currently, the price is trading just above such an order block. This is considered a highly positive technical signal. A price structure attempting to hold above this level may suggest the beginning of another bullish acceleration, similar to what happened in the past. Especially with increasing volume as the price approaches this level, it may indicate that buyers are regaining strength, supply is weakening against demand, and the price is finding equilibrium at this point. If this level acts as strong support, it is quite likely that the price will bounce upward and head toward new highs. In previous tests, the price has been observed to recover quickly and make sharp upward moves upon reaching this area, without encountering any significant resistance. This suggests that the area holds strong buying pressure and is seen by investors as a valuable opportunity zone. These previous bounce reactions are especially important for technical analysts, as historical behaviors provide clues about future movements. History doesn't repeat itself, but similar behaviors often do. For this reason, the area where the price is currently located may be laying the groundwork for a new upward move. Of course, markets never move in a single direction. Sometimes the price may enter a consolidation phase even in strong support zones, moving sideways for a while to gather strength before initiating a stronger upward move. Such behavior is frequently observed during periods when large institutional investors are entering the market, accumulating liquidity and preparing to lead the trend. The price holding above this significant area right now is another key indication of growing investor confidence and a healthy market structure. It is also crucial that the price has tested this level not just once, but multiple times. These touches indicate that the level has been validated by the market and is now considered a strong technical support zone. In technical analysis, such multiple tests increase the strength of a level, and the reactions from that area become more meaningful. If the price returns to the same level and again receives a strong buying response, it confirms that the area has become a strategic buying zone recognized by investors. In such scenarios, investors often place their buy orders near these levels and expect the price to bounce back up. This allows them to minimize risk and maximize profit potential. If the price returns to this level again, it is highly probable that another bounce, similar to the previous ones, will occur. These repeated reactions suggest that strong buyers are supporting the price at this level, and the upward momentum may once again form. Additionally, the fact that the price is currently attempting to build a structure above this level may indicate that market confidence is rising, and that investors are willing to hold positions at this zone. If the price consolidates here, gathers strength, and then breaks upward, this could signal the start of a new bullish trend. Positions taken at strong support levels like this often create significant momentum even in higher timeframes. This means that a recovery beginning in the short term could potentially turn into a lasting upward movement in the medium to long term. Moreover, investor psychology plays a major role in these strong support zones. Investors who saw the price bounce from this level before begin to trust this area. That trust may lead both retail and institutional investors to increase their positions at this level. This kind of psychological effect helps reinforce the technical structure. When technical analysis is combined with psychological insight, the market's direction rests on a more solid foundation. This increases the likelihood of an upward breakout. Lastly, it's important to note that while technical analysis tries to predict the future based on past price behavior, it never provides absolute certainty. However, these types of strong support zones, when combined with proper risk management and strategic planning, offer significant advantages to investors. If the price remains above such a block and shows similar reactions to those seen in the past, it may build bullish expectations among investors. This expectation can lift market sentiment and create a positive atmosphere.
In the crypto market, there is often speculation among investors about whether certain projects can surpass other major ones. In most of these comparisons, the focus is solely on price levels. However, it is not the price of a coin, but its market capitalization that reflects its true size. At this point, the question arises, Can XCN surpass XRP? When making such comparisons, factors beyond price must be considered, such as the ecosystem behind it, use cases, investor interests, regulatory compliance, partnerships, and technological infrastructure. First, let's take a look at XRP's current market capitalization. XRP's market cap is approximately $200 billion, which clearly shows how large and established XRP is in the crypto market. XRP is a payment coin developed by Ripple, mainly for use in international money transfers. With infrastructures like RippleNet, XRP collaborates with numerous banks and financial institutions worldwide and aims to integrate into the global financial system. In this context, XRP holds many advantages in terms of both technology and strategic positioning. It has already faced and largely overcome regulatory challenges in major markets, such as the United States and the United Kingdom. This has increased XRP's legitimacy and helped it gain investor trust. Looking at XCN, its market capitalization is around $630 million. This reveals that XCN's market cap is almost 310 times smaller than XRP's. In other words, for XCN to surpass XRP, its market cap would need to reach $200 billion. This would require an extraordinary increase in investor interest and liquidity. For such growth to occur, XCN would need to experience major leaps not only in price, but also in adoption, use case expansion, and partnerships in the coming years. However, for now, there's insufficient data and signals to suggest that XCN could make such a leap. XCN may have the potential to play an important role in the decentralized finance ecosystem, but at present it remains a relatively small-scale project compared to XRP. That said, during bullish market conditions, coins like XCN can experience major breakouts. Many altcoins in the past have seen value increases exceeding 1,000% during bull runs, delivering significant short-term profits to investors. From this perspective, it's not unreasonable to think that XCN could deliver a notable performance in the next bull cycle and climb into the top 100 coins by market cap. However, that level of success is a very different milestone than reaching XRP's current position. XRP's global adoption as a payment instrument and Ripple's vision to integrate into the international financial system is quite different from XCN's roadmap. Therefore, it is difficult to evaluate the two projects on the same playing field. Considering XRP's legal framework, technology, adoption rate, and institutional partnerships, it would take XCN many years to reach a similar level. Additionally, the volatile nature of the market, regulatory pressures, and investor trends are all factors that directly influence this process. Although it seems unlikely that XCN will surpass XRP at this point, that doesn't mean XCN should completely be disregarded. In the crypto world, sudden developments, new partnerships, product launches, and shifts in market sentiment can drastically change the trajectory of a project. Therefore, with the right timing and strategic advancements, XCN could offer significant returns to investors. Still, the potential for XCN to reach levels that would overtake XRP is not very realistic. But as the bull season approaches, factors such as increased interest from retail investors and more media attention could boost XCN's popularity and increase his market cap. In that scenario, XCN could enter the top 100 cryptocurrencies, making it a project well worth keeping on the radar.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.